So good morning, everyone, and welcome to today's session of Rebel with William O'Neill India, dated September 6, 2023. So before we go ahead, I would like to give a small disclaimer that registration granted by SEBI, membership of BASEL, and certification from NISM is no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investment security markets are subject to market risk and read all the related documents carefully before investing. So without taking much time, I'll start with Nifty's chart analysis for the day and the past few days as well. As you can see, Nifty has been moving higher for the last 3 days. It's been doing that on above average volumes, which is a good sign. And as you can see, Nifty has reclaimed back its 50 DMA, 21 DMA, and it's currently comfortably trading above its 50 and 21, 50 DMA and 21 DMA. And Nifty at this moment is minorly placed below the 19,600 mark, somewhere around 19,575. So overall, the movement has been positive. If we talk about from the broader market perspective, Nifty Mid Cap 100 and Small Cap 100 are actually making new 52 weeks high each and every day. So the broader markets are actually performing much better than the index. And if we talk from the D-Day perspective, distribution day count is still elevated at 6. But by Friday, one of the distribution day count is expected to get expired. And going forward, if the distribution day count reduces, that would be really good. That is, no distribution day gets added. Hello. If no distribution day gets added and more distribution day gets expired, then it becomes a really good sign. And going forward, if this previous highs gets reclaimed, then Nifty will go back from an uptrend under pressure to a confirmed uptrend. So that will be a really good sign. On the flip side, if Nifty lets go of this 21 DMA, 50 DMA and moves back and the distribution day counts again get elevated, maybe one or two distribution day gets added and Nifty breaches its 50 DMA on above average volume and this previous low also gets breached, then Nifty will go to a downtrend considering even the broader market movement because we have to consider the broader market movement as well because the broader market movement at this juncture continues to remain very strong. Talking about key news, yesterday FI net sale Indian equities worth rupees 1725.11 crores, where DI bought equities worth rupees 1077.86 crores. Vedanta Limited, the Zambian government had agreed to transfer ownership of Konkola Copper Mines back to Vedanta Resources. The assets of Konkola Copper Mines include reserves of 16 million tons of copper. NBCC has entered into an MOU with Kerala State Housing Board for development of a 17.9-acre land parcel in Kochi. The project's estimated value is rupees 2,000 crores. Jio Finance is expected to be excluded from Nifty 50 on September 7. So the global market update talking about yesterday's US market movement. All the three indices closed lower. Dow Jones closed lower by 0.1%, S&P 500 by 0.4%, and Dow Jones by 0.6. Sorry, Nasdaq Composite by 0.1%. Asian markets, barring Nikkei, all the other two trading indices are trading lower. Nikkei is the only one trading higher by 0.6%. Kospi is trading lower by 0.4%, and your Shanghai Composite is trading lower by 0.3%. So Gift Nifty is indicating a higher opening and Yesterday's trade for Nifty was around 19,575 levels. Gift Nifty is indicating opening at around 19,651 levels. So higher by around 60, 70 points. And considering the past few days trend, it may materialize. And today also might see Nifty to move higher. But if considering from the global market perspective, the global markets, the Asian and the US market remained a little on the jittery side. So maybe some kind of selling can happen once the open for Nifty happens. Talking about the chart of the day, the chart of the day for us is Kei Industries, and the stock is forming a stage 2 cup base, as you can see. Overall, the ratings for the stock is very good. The EPS strength of 92 is superb. Price strength is fair at 79. Buyer demand is also very good. But with fair price strength, your RS line is moving higher, which is a really good sign. And on the left side of the base, you can see hardly any signs of distribution. That is no stock falling on above average volume, which is a really good sign. On the right hand side, some accumulations have started to happen, and the stock is still 7% to the pivot. So there is good headroom for the stock to move with above average volumes, and again the RS line to start moving higher. There is a prior uptrend from stage 1 to stage 2, so which is also a good sign. And overall, the business dynamics for the company have been very good and have been improving. And for the last 4 to 5 quarters, the company have been coming up with really super results. And similar can be seen in the ROE for last year, that is FY23, as well as 18%, which is very good. Fund holding for the stock has also been increasing and has been improving quarter on quarter. So going forward, what do we require? I mean, all the check boxes get ticked in terms of one, the parameters, two, the fund holding, three, in terms of business dynamics for the stock, in terms of the business model, the robustness of the recent quarter results, plus the technicals for the stock also remain strong. So at this moment, the only juncture the stock is standing is it's a breakout from the pivot. Going forward, if the RS line again starts to move higher, the stocks move higher on above average volume, and then it breaks out on above average volume, it can be a really, really good stock to watch out for, considering that the stage count for the base is also 2, and again, which makes this stock as an ideal candidate to keep in your buy watch list. So thank you, and that's it from my side. And stay tuned to this space of Prebell with William O'Neill India from Monday to Friday at 8:45 a.m.